Hi, my name's Martin Cavey from Chorus Accounting, and we're here to talk about payroll. I know, payroll. It's not a very interesting subject, but it's one of those things that when you start growing a business, you need to take on your first employee and you're not really sure where to go, where to start, what to do. So why is it important? Well, payroll governs how an individual receives their money. If they're an employee, it has to be put through a payroll system, they have to have tax deducted from it, national insurance, and even the dreaded auto-enrollment pension. But that's really important because it has to be done on a monthly basis or a weekly basis, depending on how you pay your employee. But why do you need to get that payroll system right from day one? Well, first of all, if you're an employee, you have to give them an employment contract. That's really important because that governs your relationship with them from day one. If you don't give them an employment contract, then you aren't setting out the roles and guidance in terms of, can they have holiday? When can they be off? Can they do this? Can they do that? Have they got any autonomy? What's going to happen? You don't set that relationship up from day one, that could lead to problems down the road. The next thing you need to do is you need to contact HM Revenue and Customs. I know it's not something people like to do, but ultimately every business that employs staff has to have a payroll scheme. The people that provide that are Her Majesty's Revenue and Customs. And you need to do that in advance of paying the first time. Because if you haven't got that, then you can't pay the employee, you can't then make the submission to HMRC, and then we have a problem. So you have to make a submission to HMRC, Her Majesty's Revenue and Customs. That has to be done on a monthly basis and has to be done by either the pay date or the 5th of April, whichever is the earlier. And that's done electronically. It's done using something called RTI filing, real-time information. And if that's not done, then the revenue can fine you £100 a time. That's right, £100 a time. That can add up really quickly, especially if you're paying them weekly. Then what do you need to do? Well, you need to pay your staff, so that's a bank payment out of your bank account. And then by the 19th of the month, you need to have then made a payment to Her Majesty's Revenue and Customs for the tax, the national insurance that you've deducted from the employee, and unfortunately, the national insurance that you have to pay as the employer. There is some good news with that, and there is an employer's allowance that can kick in up to £4,000 and remove that liability for a little while. But you imagine if you start employing 5, 10, 15 people, that allowance gets used really quickly. The final bit that we talked about was auto-enrollment pension. That's right, pension. I know, it's not interesting, it's not great, and yes, that's what national insurance is designed to cover as well. But every employee has to be offered an auto-enrollment pension, and that can be done via a variety of mediums, but you as the employer need to decide how that's going to work. Once they've been offered the pension, then at the moment, they pay 5% of their salary in, and you have to top it up by a further 3%. That's right, it's another tax. At the end of the day, tax doesn't have to be taxing, but when you're employing a member of staff, that can add up really quickly. I've been Martin Cavey from Chorus Accounting. Payroll's one of the things that you have to deal with. If you're not sure, then please message me.